Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock p.m. in New York. It is Monday, the 29th day of October, 2012, and this is the Daily Report for Gold and Silver. First of all, our thoughts and prayers go out to all those on the East Coast, wishing them safety and safe haven. Now to the markets. Obviously, very, very quiet trading in that gold is traded in New York. Currently, as you can see, 1709.16 current print. That's the bid. 1710. That's the ask. Puts it off about $2, about $1.90 on the day. Silver, although that is under considerably more pressure right now than the gold market, currently trading off about 33 cents. As you can see, it is below 32, 31.75. It has had a low of 31.58, high 32.27. In gold, 1718.30 is the high and 1705 is the low on the day. Traders, I want to start today's show off by looking at a very, very short-term chart. This 360 minutes in Henkin format. And what is apparent to me, of course, we are dealing in a market with very, very light volume in trading. But you can see over the last few trading days, we touched upon this a little bit on Friday, but for the first time we have seen in a while the marketplace really move sideways as opposed to having a defined corrective period or a defined upside period such as we see here. You can see a little bit of sideways activity here, but really the strongest definition that I can see right now is we are trading in terms of the range. We're staying right within the confines of these two Fibonacci numbers, our 61% and our 51% retracement, 1701 to 1719. As you can see, this range right in here, we've pretty much covered the gamut. We've got a couple of extreme lows a little bit below that. These are those 1699s, 98 prints, and really nothing above it. What does that tell us? Well, what that tells me is that the market is most likely consolidating, and I believe that it's probably consolidating before we see some sort of an upside move. That was my belief last week. I still maintain that belief currently. Of course, when we stand back, and now we're looking at a daily chart is of Elliott wave count and Fibonacci retracement areas, significant areas, of course. We can see that without a shadow of a doubt, this market has been in a defined corrective wave right in here. There's no doubt we can see that. We also have the first kind of glimmer of light, because you can see they've gone green. I'll show it in another chart that kind of illustrates that. But in terms of straight Elliott wave, when we consider this move upwards and we define this range right in here, it has gone to a 30% retracement, which is a very valid retracement. My one caveat is, should this area not hold, we really don't have any real strong support till really the mid 1600s. It has been my sentiment that it will probably find support here and trail higher, but that's what we'll have to see. Also, if this is in fact that corrective B wave within an ABC correction, we could in fact see one more downside correction before re-entering the impulse stage of the Elliott wave cycle. Now traders, the last chart that I want to look at today in terms of a gold chart is going to be this weekly chart. And really what we're looking at more than anything else are these Fibonacci retracement levels and the candlestick patterns found within these recent price moves. This is that last month of trading activity. This, of course, is a candle that's beginning to form this week. Obviously, trading off about $1, you can see it is red. But once again, this marketplace is very quiet today. Was up overseas. We'll have to see how it reacts. But what's important in terms of getting some kind of real concrete idea that this correction is gone, this corrective wave, this being the A and now going into our B, We really want to see this candle go green. And of course, the higher the high that's made, the better it is for gold bulls. Now, until we see that, we cannot with any kind of certainty right now on a long-term trend say that this market is back up and away. We're going to have to see exactly what happens this week in trading. Of course, we have the election in the U.S. It's just right around the corner. Right now, we've got a severe weather situation over on the East Coast, so I do expect it to be quiet both today as well as tomorrow. Now, silver is a different story because we are really teetering right now just below. You see the current print, 31.74. To me, 31.82 is a fairly critical area, and it needs to hold roughly in this area, meaning it can track below here for a little bit, but it can't start substantially closing below this area. Because if it does, the next real level of support isn't until about $30.50. 30.48 is the specific number or target on our Fibonacci retracement area. However, as you can see, we've had quite a few lows go into this area. This is a daily chart, but we've had the closing price on a Henkin Ashi chart, meaning an average chart, maintain itself above that price point. Now, all I've really done is converted our Henkin Ashi back into a standard Japanese candlestick because it's going to give us a better sense or feel for what the market is actually doing. Why? Because it's taking true opens and closes where the average chart fixes the midpoint as an open and the closing price. And you can see it is below this point right now. You can see we've had a couple of closes below, or a couple of points where it traded below, but managed to close above, except for the other day and this candlestick that is now forming now. I believe this is today's, and this, because we're going in the afternoon session, is the beginning of that next daily candle. As I said, we're down over 1% in silver. Again, it is going to be quiet trading, and because of the quiet trading and low volume and open interest, more importantly in silver, I would expect that we could have larger gyrations or volatility than we do in gold. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.